Hello, good morning. The topic is final accounts. The chapter objectives will be identify the objectives of preparing various final accounts, understand the treatment of different items in the preparation of the final accounts, explain the importance of final accounts, describe the role of worksheet in preparing the final accounts. Objective of final accounts. Why we prepare these final accounts? Final accounts refers to the various accounts and statements that provide information related to the progress of the business. These are prepared from the trial balance. They provide the following information: profit earned or loss suffered by the business during a particular accounting period, that is from profit and loss account, and the financial position of the business, that is from the balance sheet of the company or the business. Accounts and statement comprising final accounts. Final accounts with respect to a particular business are trading account, so that we can know the gross profit or loss, profit and loss account, so that we can know net profit and loss, balance sheet, that is assets and liabilities statement. Trading account and profit and loss account are together known as income statements. Income statements are the final summary of the accounts that affect the profit and loss position of the business. Now, first we come to trading account. It shows the overall results of purchasing and selling of goods. It includes all the direct expenses incurred in the business. It provides gross profit earned by the business if total sales is greater than total purchases. It provides gross loss suffered by the business if total sales is less than total purchases. This is a format of trading account as earlier explained in the ledger. The left hand side is the debit side, the right hand side is the credit side. Now come to the debit side where all the expenses will be shown. As we have earlier done, debit all the expenses, credit all the revenues. So all the expenses will come in the debit side and all the revenue will come in the credit side. The first item in the trading account is opening stock. Next is purchases, less purchase return. Then there will be direct expenses like wages, custom and import duty, carriage expenses, royalty, manufacturing expenses, packing expenses, and if there are any other direct expenses. Now come to the credit side. The foremost revenue is sales, less sales return, and then is closing stock. As earlier explained, if the revenue is more, expenses are less, there will be gross profit transferred to profit and loss account. But if expenses are more, revenue is less, then gross loss will be transferred to profit and loss account. Items on the debit side of the trading account. First is opening stock. Now what is opening stock? It refers to the total cost of goods left unsold at the beginning of the current accounting period. Purchases. It refers to the total cost of goods purchased both in cash and credit. In case of purchase return, first net purchases is computed by deducting purchase return from purchases and the result is then debited to the trading account. Next is wages. It refers to the amount paid to the workers for manufacturing, loading and unloading of the goods. Custom and import duty. It refers to the amount paid as custom and import duty when the goods are purchased from outside the country. Items on the debit side of trading account. Again, carriage expenses. It refers to the direct expenses that are incurred while transferring the purchased goods from vendor to the factory. These expenses are also known as freight in, carriage or cartridge. Royalty. It refers to the amount paid to the owner for using his rights. Manufacturing expenses. It refers to the expenses spent on gas, electricity, water, fuel which are required to run the factory. Packing expenses. It refers to the amount spent in packing the purchased goods to bring them to the factory. Now the credit side of the trading account. Closing stock. It refers to the total cost of the goods that are left unsold at the end of the accounting period. Sales. It refers to the total cost of goods sold both in cash and credit. In case of sales return, first the net sales is computed by deducting the sales return from total sales and the result is then credited to the trading account. Now, what is the importance of the trading account? It provides information related to gross profit and loss and helps in defining the upper limit for the operating expenses of the business. It helps in computing of the gross profit ratio, which is very important. Decrease in the gross profit ratio indicates increase in the purchase cost or decrease in the selling price. It allows the comparison of opening and closing stock of the two accounting periods, which is very important. This helps in preventing unnecessary investment of the funds for the purchase of inventories, because investment in inventories will be dead investment. Therefore, it is necessary to know what will be the opening and closing stock. In this chapter, we have identified the objectives of preparing various final accounts, understand the treatment of different items in the preparation of the various final accounts, that is trading account, explain the importance of trading account, describe the role of worksheet in preparing the final accounts. Thank you. In next chapter, we will look into profit and loss account and the balance sheet.